Hello and welcome to myfinanceteacher.org. In this video, I'm going to have a look at fundamental value of three very interesting, very large gold miners, which are Kinross, KGC, Kirkland KL, and AngloGold Ashanti AU. Today is 30th of August, and I'll first post this video on my website at myfinanceteacher.org, and perhaps after a week or more, I will also share this video with the public on YouTube. So if you're interested in timely updates, as you see over here, I update the members relatively frequently. If you're interested on timely updates on precious metals, other commodities, the general stock market, energy, and cryptocurrencies, consider joining us at myfinanceteacher.org. Talking about the fundamental valuation, here are the factors that go into my model, although this is not an exhaustive list of all the factors. And even if you came up with an exhaustive list of fundamental valuation factors, the share price from week to week or even from month to month would fluctuate for a number of technical reasons. The factors that go into this particular model are the precious metals prices, the amount of reserves and the resources that the miners have, the all-in sustaining costs of extracting those gold and silver reserves out of the ground, the long-term debts, taxes. We of course look at the per share value, so we look at the number of shares outstanding, we look at the discounted value, taking into account the time value of money, and I throw in a bit of a secret sauce on insider shares because a greater percentage of shares held by insiders is a positive sign that aligns the management incentive relatively well. And if the company is truly doing well, those insiders are likely to be strong hands supporting the share prices. Moving on to gold price. Gold price is somewhere around 1800 right now. So I'm going to use three scenarios for gold price, starting with a conservative at only $1,600. So that's the sort of valuation that you probably might expect if gold price just drops by a couple of $100 here, but doesn't drop as severely as it would going down to, I don't know, 1400 or so. A balanced scenario is where gold price just meanders going nowhere for quite a while, somewhere around 1800. And an optimistic scenario in this particular model is a gold price of $2,000. Although, as I mentioned in some of my older videos, I think over the next couple of years there is a really good chance that gold price would be beyond $3,000. Perhaps you think that's crazy, but time will tell. Moving on to the reserves and resources, Kinross reports proven and probable reserves of gold of nearly 29 million ounces. Actually, all of these companies report a little bit more at the end of 2020, and what I did is I subtracted the production so far in the first half of 2021, bringing down the value a little bit as the reserves seem a little bit lower than last reported. M&I resources, that's measured and indicated resources of gold for Kinross, are just over 34 million ounces. Proven and probable reserves of silver are just over 59 million ounces and 39 million ounces of M&I resources of silver. Kirkland and AngloGold Ashanti only report the reserves and resources of gold. Looks like they don't have much silver, so proven and probable reserves of gold for Kirkland is 19.4 million ounces and 12.5 million ounces of M&I resources. AngloGold Ashanti has 28.5 million ounces of proven and probable reserves of gold, and M&I resources are just over 51 million ounces. Looking at all-in sustaining costs, long-term debts, and taxes, all-in sustaining costs for Kinross, that's the midpoint of the guidance for 2021, is at $1,110, and the long-term debt is over $1.4 billion. And for taxes, I don't want to spend too much time going into the details, so I just simplify things, assuming a 20% tax for all of these valuation models. Looking at Kirkland they have a relatively low all-in sustaining cost at only $800 and very low long-term debt at under $19 million. And the most leverage to gold price over here is at AngloGold Ashanti because the all-in sustaining costs are highest at $1,290 per ounce. And it has a long-term debt of $1.85 billion. So due to this relatively higher leverage, you'll see that the valuation of AngloGold Ashanti is probably a little bit more sensitive to gold price. Moving on to the number of shares outstanding and discounted value. For the time value of money, I'm going to apply a discount rate of 5%. The number of shares outstanding that Kinross has are at 1.26 billion shares outstanding, and only 0.23% of those are held by insiders. Looking at the average mine life of proven and probable reserves, that's at current production, these reserves would last for around 14 years. And if you add, this should be plus over here, if you add half of M&I resources, the average reserve and resource life increases to 21 years. Looking at Kinross, they have nearly 266 million shares outstanding with over 4% in insider hands. That is, I think, quite a positive sign. And the average mine life of reserves is 14 years, and the average mine life of the reserves with the addition of only half of resources is 19 years. Looking at AngloGold Ashanti, they have over 417 million ounces with 0% in insider shares. That's all according to Yahoo Finance. That's not really a positive sign. I don't like to see 0% held by insiders. And the mine life of reserves is 11 years, whereas the average mine life of reserves with an addition of half of the M&I resources is 21 years. Now, before we actually look at the valuation numbers, let's have a look at some of the highlights that don't go into the calculations within the model. So you perhaps want to adjust those numbers according to some of these highlights. All of the companies have very comfortable cash balances, where the number is especially significant with Kirkland Lake because they don't have any long-term debts. All of these companies have a relatively interesting exploration potential. And the current valuation only includes the actual reserves and resources in the ground without including any of the possible future growth of those resources. In more details, there will be a feasibility study by Kinross for their Lobo Mate project in Chile. The feasibility study will come out in the last quarter of this year, so perhaps that will be an interesting driver for share prices. And gold production is going to start at GIL satellites. That's in Alaska. This production is also going to start in the fourth quarter of this year. So perhaps by the end of this year, Kinross will be looking quite attractive. In relation to Kirkland Lake, an interesting point here is that they have done share repurchases, returning a lot of capital to the shareholders, and they plan to continue those share repurchases, which again would also elevate share prices going into the future. And looking at AngloGold Ashanti, one thing to notice here is that in addition to gold, they also have copper reserves. And the value of these reserves doesn't go into this valuation model, so perhaps you might bump up those numbers just by a tiny bit. And production is going to restart at Obuasi in Ghana sometime by the end of this year. And this production is going to ramp up to regular higher levels by the mid of next year. So this again might be an interesting driver for share prices for AngloGold Ashanti. And now we can finally have a look at the valuation numbers, starting with a conservative valuation, where we plug in the gold price of only $1,600 and the silver price of only $22 per ounce. And in this conservative scenario, we only look at the proven and probable reserves in the ground, without considering any of the measured and indicated resources, never mind inferred resources. So this relatively conservative scenario of 1,600 on gold price, although who knows, perhaps tomorrow it will be at 1,400. This conservative scenario gives you a valuation of under $6 for Kinross, while the market price is just over $6. So that's an overvaluation of 2%. For Kirkland Lake, the conservative valuation is just over $33.40, while the market price is just over $39.40. So that's an overvaluation of 15%. And for AngloGold Ashanti, the conservative valuation is just over 10%, whereas the market price is just over $16.80. So that is an overvaluation of 40%. As we've seen, because of higher all-in sustaining costs, AngloGold Ashanti might actually be a little bit more sensitive to gold price, so a drop of $200 from current levels might be kind of painful specifically for AngloGold Ashanti. Moving on to the balanced valuation, where we plug in the gold price of $1,800 and silver price of only $26, and still we only look at proven and probable reserves without including any of the M&I resources, never mind inferred resources. This balanced scenario gives us a Kinross valuation of $8.60, which is a 42% undervaluation versus the market price of just over $6. Kinross balanced valuation is $41.80, which is a 6% undervaluation versus the market price of under $40. And the balanced valuation for AngloGold Ashanti is over $18.20, which is already an 8% undervaluation versus the market price. And next, moving on to the most interesting optimistic valuation, where we plug in the gold price of $2,000 and a silver price of just only $30. And in this valuation, we look at the proven and probable reserves and only half of measured and indicated resources. All of this gives us a valuation of over $15.20 for kinross. That's a 150% undervaluation versus the market price. For Kirkland Lake, the valuation is over $60. That's a 52% undervaluation versus the market price right now. And for AngloGold Ashanti, again, the valuation is over $42.40, which is a 150% undervaluation versus the market price right now. So as I mentioned, as we change gold price from $1,600 to $1,800 to $2,000 per ounce, AngloGold Ashanti is the one that reacts the most because of their high leverage versus gold price and high all-in sustaining costs. So all of this looks quite exciting. Perhaps a rally of 50% to even as high as 150% in the share prices of these miners. Is it even feasible? Never mind whatever the model tells us. Is it possible? Well, let's have a look at summer last year when gold price was actually somewhere around $2,000. At that time, the kinross price was around $10. So that's perhaps not a 150% gain, but somewhere around the 80% gain or so. So perhaps the model here is a little bit optimistic. I've noticed that kinross is often below the model, perhaps because it's a Russian company with some of their jurisdictions being maybe a little bit questionable. Looking at Kirkland Lake, in summer last year, the highs were somewhere around $55. That, yeah, works out quite well with the current valuation. So 40-50% rally if gold price goes up to $2,000 is quite doable for kinross, no problem here. And looking at AngloGold Ashanti at the very peak over here, although the peak was not very long-lived, AngloGold Ashanti was somewhere around $38. Somewhere around $38 does compare relatively well with this model valuation of $42. So again, that's not a 150% gain, but maybe over 100% gain if gold price goes back up to those levels again. So it doesn't look like all of these numbers are impossible. I do think things really look interesting over here. So let me know what do you think in the comments below. And of course, remember to hit that like button and share this video with your friends. I would really appreciate it if you help me grow this channel a little bit. For now, I wish you a productive Monday and good luck in your trades.